Hello family, in this video I'm going to explain to you the way that you should identify the inducements. From A to Z, everything you need will be fixed in this video. So pay attention with me. First of all, what is the inducement? Inducement is simply a low or a high that people believe will be protected. So what I mean by that, for example, this is a breakdown GBP in ZD and we will fix everything here in this chart. All we need is just simple candles here. And the thing is, you need to find what trigger people emotion, like this fair value. Why is not this one? This is what you need to ask yourself. Always you need to ask yourself questions. For example, some kind of people online, I saw them, you'll say okay, choose this one because the market more likely to run higher, and then check them all out. And another guy will say okay, this is a bearish trend, and then yeah, take a sell, target equal lows or equal lows there or wherever, and they got smoked too. So how can you do that? Simply by using inducements. Inducement is the a law that people believe will be protected. Okay? And the next part is how can you identify that? You identify that by lows and highs. For example, in this example here, when the market touched that fair value gap there, it fell to make new high. This is what? This is inducement. Because people they believe this market structure will start running higher, or the market structure also in lower time frame, and that fair value gap. So all the people got in that move after we see that rejection higher. So the institutional, they know that liquidity now is generated below that low as a sell side liquidity, and we will go deeply in 4 hour to understand more. Let's just go to 4 hour. Okay, perfect. Now here we are. Look, people they will see that fair value up there, and yeah, this is the inducement. Perfect. And then now we need this one. You see now that fair value up there, you start buying. You see another one, you start buying. Now everyone he starts putting their stop loss there. Okay. Now the institutional they notice that. From there they know that liquidity being generated below that, and they drop the market lower. They accumulate more shorts there. They accumulate, and then they push the market lower. They come back again, retest, induce again. Before the market always need to induce people before it move to the direction. It induce them, check them all out, go to another direction until that liquidity all generated. Look how many days the market stuck there. It just people start buying, selling. The market it just accumulate. Okay, and then check them all out. Look, after the market take the inducement there, you need market structure shift in the daily time frame. You need to identify that because the fair value cap is in the daily time frame. You will not stick into that market structure there, no, or break of structure or whatever you want to call it, or this one, or this one, no, all of them are wrong. You need to go to daily time frame where this fair value gap formed. There where you need to identify the market structure shift. So let's go back to the daily time frame to see. As you see here, the market come, tap into that sell side liquidity, take all the smart money, all the stop losses. Smart money took all the stop losses below that. And the market structure is we need a candle close above that high. This is a market structure shift. You need to wait for the candle to close above it, which means that one. After that candle being closed, this is your golden ticket, that one. and then you will wait for the market to retest and then you start buying. Or for a better side, for me, I am using this one, and also I use for second entry, I use that fair value gap. Sometimes we don't have that fair value gap there formed in that lake, but it should be also in the daily time frame. But if you have it, when the candle again close above it, this is a second entry. Okay, you can also enter when the market close above it, in that one, in that lake, as a second entry, and your stop loss should be below this. Okay, and then the market, like, it will skyrocket because no one more buying and everyone now trust the selling. So yeah, the market trap a lot of people here. Look how many weeks, look, like days and days of weeks hitting people's stop losses, and then the market finally move higher. And look, it's very clear trend because so many people trapped there. Yeah, so people and traders, when, like, just be honest with you, when you see that market structure, are you gonna buy or not? Of course you're gonna buy, because you will see the sweep of liquidity, a fair value gap being inversed, we push higher, and then you will see this is an equal highs, you will start buying eventually. And then yeah, now your stop loss being ready to deposit here, and then the market maker come, then check you all out, and then yeah, move to your direction. So the market makers, let me tell you here in very easy way what you need to look. You need to find a fair value gap. Okay, this is a trend. You need to find a fair value gap here, and then wait for the market to come to it, touch it, and fail to go above that high, something like that. Okay, and then your wait, and then your idea should start from forming from this. Now you will start focusing from this moment. If it take a new high, forget about it, move to another pair, another frame. If it didn't, and then the market starts coming back, taking that low, ask yourself question, this fair value gap, which time frame is it? Is it in the daily time frame? Okay, perfect. You will start identify daily highs, this, in this deep. And then what you're gonna do is wait for the market to close above it and then come to retest and then move higher. This is easy. Okay, you don't need to make it like more complicated. You just need to wait for that inducement to form, being out, and then the market will skyrocket. In the short side, selling side, you will need to do this one. The market will do something like that, creating trend line or whatever, creating bearish trend or whatever, creating a fair value gap there, wait for the market to come to touch that fair value gap, induce people, fail to go more lower, check them all out, and then run higher, run lower. In this leg that people will be out, this is inducement. Okay, in this manipulation, you will start asking yourself again, is that fair value gap in the daily time frame or 4 hour? If it's in daily time frame, you should wait for those daily lows will be formed there until the candle close underneath, below it, and then you start selling. So your selling portion will be here, targeting equal lows there or all the highs and lows. This is your simply easy way. So, and another things that you need to focus on it is risk management. You will have risk like 0.5% when the candle close, and if we have that fair value gap as I said there in this example, where is it? Yeah, the daily time frame. Like for example, in this trade here, you wanna risk, let's say 1%. Okay, risk 0.5% in this and 0.5% in this. If you are risking 2%, risk 1%, 1%. And yeah, this is the easy things to do. And also it's more efficient when you are risking here and you are risking more here. The market in this time here, it will not come to retest this. Okay, so you can adjust this one, put it in break even, and yeah, and hold this one. After taking that high, execute this one in profit and hold, keep holding this one for new target. This is just the way I am working. Okay, and you always need to identify sell side. Always, if you don't identify sell side, you will be smoked. This example here, it's the opposite of it. It's happened here in the sell side, in the buy side, sorry. So as you see here, let's study this one. This is a fair value gap in what? In the daily time frame. Okay, and people, the daily come, they got induced in that leg, and then the market failed to go lower, that one, and then they got swept, the liquidity being generated. This is buy side. Okay, and then yeah, let's put this one to make it clear for you. And then boom, the market broke the structure. This is a daily fair value gap, which means we will wait for that candle to close below that, which is this one, and then this is 2 days easy opportunity to sell. Okay, and then yeah, just to target this one, because your overall idea is just to target this low, and then you will start looking for buys. But I'm just giving you this thing is just happening all over the chart, everywhere, in a time frame. Yeah, it's always there, and it's simple. You don't need to complicate this one. And if you use the like the lower time frame in 4 hour, you can, even when you start being more advanced on that, and then when you start being more advanced on this technique, you will start catching this market structure shift after that inducement being generated. Market smoke that, and then yeah, the market structure shift happen already here in 4 hour, and you can just simply start selling if you are a scalper trader. Okay, your stop loss above that, and then you will target that inducement low, simple, without any more thinking. And then simply here is the same thing. But for my rules, because I am not like everyday trader or day trader or whatever, I don't trade that. I am using daily 4 hour time frame only. I am not using less than that. Okay, I can use that for entry. For example, when the price is already confirmed the daily market structure, all these days, like how many days is this? When it this one I will start buying this one, this one, this one, this one, this one, this one. Like 7 days a row, I will start just buying. I'm not talking about this one because this one it starts being confirmed, so I will be more bullish there and I will hold my trades. But all over these 7 days, I will start just buying, trying to catch the daily low in London kill zone or New York kill zone. Okay, and you can go and study all these laws, daily laws. It will be happening in New York session kill zone or London session kill zone. But if you are not, if you know what you are doing, and you know this will be start just creating more highs, you will start easy, being easy, and the same this. Okay, and yeah, now after the market just run higher, look what it did again. This high create that low, and that low failed to create new high. And if we are already come from kind of fair value gap in higher time frame, this low will be smoked, which means the market will come all the way this and then run higher. So yeah, this is where people get it wrong. Basically, the market always going making lower low, higher high, lower low, and then higher high again. It's dependent. Then here you have some kind of structure, lower low, and then here again you have higher high. You get confused. A lot of people here getting confused because there is none of this thing in the market is real, by the way. But the thing is, as institutional, they don't actually care about this kind of stuff. Okay, they have a zone that they care about, and they have their target. So this and this, after they place a trade, they don't care about what's going on here. They know where the should start get out. So what I'm going to tell you here is the market, for some kind of reason, this plan here it fell. Like it come here and it starts coming again to pass that high, but it didn't. Okay, that high it didn't take to buy this low, which means this guys they are trying to buy here is low weak hand. Or another thing is the retail already starts buying, they're trying to catch the trend. And then the market maker they notice that there is a lot of people that start buying this, buying that, buying this. Market structure shifts, wherever you are using so many confirmation to start buying. And this what it give you as trader is it give you insight of what's gonna happen. That low you know for sure it's full of sell stops. Why is that? Not this low, not this low, okay, this low, because the market didn't give them that high. Because when the market like make them in the trade, it can easily make them a take profit, everyone will win, but it this is not all the life work. We need someone to lose, okay, because everyone should lose, and then yeah, market will go its own direction. So what I'm going to tell you is you need to find the low that failed to create new high. This is the first thing. And this is your sell side. This is your main idea of liquidity to be swept and then run higher. And this low, it should not be random anyway. It should be a round of order block here or imbalance here, a clear imbalance or fair value gap or whatever you wanna call it. It doesn't matter. So let me put this one like that. You will find expansion move, come, retest a fair value gap there, and fail to create new high. This is a fair value gap. Okay, and this low now you have your sell side. What you wanna wait is the market to come to take that sell side and then break off structure, and then you will start buying. If you really know what you are doing, you will wait until this thing here. Okay, you don't want to start chasing the market there, like as everyone is doing, using fair value gaps and this kind of stupidity, because the market maker from time to time they create some kind of illusion in the market and they say okay, use this one. No, if it didn't work, use this one, another one. No, it's not 5 minute market structure, it's 10 minute. No, 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 use 30 seconds. It's full of bullshit. Anyway, this is not our point, but here in the chart, this is GBP NZD, and we gonna see here that that fair value gap. Look, this is our rule confirmed there. Fair value gap, The market come in that leg, tap in into that fair value gap, and then going higher, but it didn't take the high. Do you notice that? Which mean what? This is a confirmed sell side right there. It didn't take the high because everyone here is already buying, buying here, buying here, buying here, buying that fair value gap, chasing to the moon. Okay, the market it go to the moon basically, and yeah, the markets come down to take them all of them, which means just this all of this consolidation it just was generating more sell side below that to give the market maker ability to buy. So our plan is very simple. Is very simple, and yeah, we should wait the market to come below that because this is confirmed sell side. This is a real inducement. Okay, inducement there. Yeah, that inducement, and then when the market come to that, you need to wait for what? For market structure shift. What is the market structure shift? There is so many people they make this stuff very like confused because when you see like the market it's almost hit that and it must give that market structure shift in 5 minutes there. If you believe that you will get smoked. So what you need to do, I'm giving you now like the secret sauce. If that fair value gap is in the daily time frame, if that fair value gap is in the daily time frame, you must wait for the daily time frame market structure shift. Don't tell me you will wait for 1 hour or 2 hour or wherever you just you bring it from your mind or what you think. Okay, so you should wait for the market structure shift in the daily, which mean I have two scenario. I need to pay the arrays to be broken to start believing that the market will move higher. It should be both of them in the daily. And what I am looking here, I was looking at that daily high candle because if we go now to 5 minutes, let's just let's just see, yeah, yeah, this one, yeah, 15 minutes. It's all over the market. Look, the market come create high, okay, creates a low, creates a high, creates a low, creates a high, and then that high failed to create new low. Look, it's come near from it, but it didn't touch it because a lot of people now start selling. Look what happened. Smart money accumulate. They run to that inducement, and then they keep moving the market lower. So if you are smart enough, you will start selling after that liquidity sweep. In that example, I'm already going that deeply with my students, but you only need now to understand what I'm talking about. Any law that fail to create any high that fail to create new law, it just inducement. This one will be smoked sooner or later. You can hear better when the market offer a new opportunity. You can start buying, tapping into that, and then there you will start being bearish, tapping into that low. It's the same like yeah, it's all over the chart. Okay, in 1 minute, 2 minutes, 5 minutes, it's if we go even to 1 minute, you can find it here. It's the same. Here it was nearly to happen, but if you are already inside, you will be smoked because of spread. You already put your stop loss there, you will be smoked there because of spread. So yeah, this one before the news, this one, the market creating a bearish structure. This low create a high, but that high failed to go lower. It come near from it, but it didn't touch it. Look, buy two tick or three tick. It didn't touch it, which means the inducement confirmed. The market makers, they know now they generate the enough money that they want above that high. Now they go smoke that, run lower to go aggressively they went lower. So yeah, it's very simple and it's very obvious and it's all over the place. You cannot deny that. So this is all what you need to know about inducement. Okay, And if you like the video, you wanna make sure you like the video. You really wanna make sure because I'm sharing a lot of sauce there, and then put a subscribe, okay, and you like the video, and you put a comment about question that you want me to answer, something that it's not clear, and you have like a bad thing, or you don't understand it very well, and then I will do a video about that, and then yeah, and study the inducements. It's just all what you need, and fair value gaps. You don't need more than that. You don't need weekly profile, higher time frame, PD arrays. I don't know, all of this kind of bullshit, or higher low sessions. None of these things are really working. So yeah, it worked for some, but most of people, because they got confused, they don't know what they are doing, and yeah, they just give away their money to the market makers. And yeah, subscribe guys for more. See you in the next video.